Hello again traders, Andrew Curry here, and if you go to my website you can sign up to my free trading newsletter. Now I'm back on the Aussie CAD again because it seems to be the gift that just keeps on giving at the moment. It's given lots of demonstrations of, first off it was this consolidation area here, and then of course that gave us a lovely beautiful breakout, which I think was about 400 pips, wasn't it? Have you checked the previous video? Just to that run there, yeah, 400 pips of this run here. What I want to have a look at, what I noticed when I was looking at my previous video here, was the RSI, which of course is down here, really oversold. Of course, so at its lowest point, the RSI got as low as 4.37. Okay, that's really low value for the RSI. As you can see, if we scroll back, I mean, here's the most recent, yeah, 14.13. So the most recent never got anywhere near. We'd have to scroll back quite a bit. 20.89. Okay, so that's a really low value, which is to be expected after such a large bearish move. This big long run of big bearish candles. But one of the reasons I want to mention this is because a lot of traders completely mess up with the RSI. Because you'll get people on trading forums and discussion groups saying, well, when the RSI gets really low, that's a sign to buy. Because that's the sign to just get in there. It can't go much lower. The bearish momentum is going to stop, and we're going to see a reversal in the bullish direction, which of course longer term is exactly what we saw. But it's no good simply looking in hindsight and saying, well, that was the point at which it stopped. If I'd gone in there, I would have got 400 and odd pips. Well, yeah. Let's have a look. So this candle here is of course the lowest point, which we know in hindsight. We didn't know at that point it wasn't going to produce another big red candle. If we look just quickly at the body of that candle, it's actually bigger than the body of the previous candle. So it seems like a growing momentum. So there's no guarantee that just because we have a big red candle, we will have a smaller one next time. But what I want to look at here is 4.37 is the low value for the RSI. I consider 20 and below to be oversold. But if we look at the previous candle, 7.43, again a very low value for the RSI, 10.89, and even there 12.05. So if we consider 20 to be oversold, we're quite significantly past 20. So at this candle here, if I look for my arrow, there we go, all the indications were an RSI of 12.05. The RSI is low there. The previous low was 14.13. So we're already lower than the previous low, which of course TradingView has shown in pink there to emphasize. So at this point, following that logic, we should have bought. We should have said, well, no, the RSI is really low. No. It continued on quite significantly. It continued on just to that candle for another 250 plus pips. In fact, most of the momentum of this breakout happened after that candle. So it's all very well to look in hindsight and say, well, I should have bought there. Closed my position there. I would have made a fortune. But that's in hindsight. The RSI being low on its own is no indication that the momentum will not continue or even grow in this case. So just simply doing like a lot of traders do and consequently blow accounts and simply saying, oh, RSI is low, buy, is a losing strategy.